Stavros Tousios for M4Markets, and in today's video, the last one for the week, we are going to have a quick look at the S&P 500 and euro against Kiwi. The S&P 500 has been in a kind of a corrective mode, as you can see here, because it has been the price action has been overlapping kinda over here, and we've had a somewhat of a top here, a double top, and from there we started falling, and that fall has come with two conditions that we have to take into account. First of all, momentum divergence, which is important, and second, it's actually impulsive. Okay, we don't see any overlaps between the waves so far, and as you remember, and I always actually say that in every single video, that market moves in 5 waves. And while we have seen that, we've broken outside this base channel, there is of course a potential for a reversal to the downside here, with the biggest support being done at around the 3500s. Of course, other supports are also important, with the 37 or so being one of them, and the swing low currently that we have around the 37.65. I am expecting something like this to happen. Okay, and from there, of course, we'll see how this is going to pan out. But the important thing is that we are broken outside, we are in a descent, and that suggests, since we have had 5 waves going down, we might see a pullback. Okay, and after this pullback up to around the 39.70, who knows, there is potential for further continuation. We also have somewhat of a signal popping here in the very short term that supports the idea of a potential pullback. The truth is that we don't know where the pullback is going to go. Usually in this particular stage of a potential downside reversal, we do around the 61.8%. So that can actually be anywhere though between 38.90 and 39.72. Once a signal pops on the other side of the RSI, that will give us a potential hidden bullish bearish divergence. So we can expect this to go, and of course go above the 74, which means it might be an actual quick move. Now Euro Kiwi, let me go out on the 4 hour as always. We also see a very big divergence signal here. Now, because we're looking at Euro Kiwi first time, let's look at a few things first. First, we've exited this downside trend. Second thing, we are still in a kind of in a pattern that suggests there is potential for further continuation, and we'll have been rejected twice here. This is the second time actually today. Now we do have a divergence, okay, and this divergence could mean two things: reversal or pullback and further continuation. Okay, now this pullback, you might say, might be ended here. Maybe that is the case also, but it has less chances of being done here. Or if not, then the case for the upside is restricted, which means we might see one more short leg to the upside and then descend for the pullback or for the reversal. Either way, we also see that there is some exhaustion here, because usually when we have a trend to the upside, to the downside, this second wave goes and rejects the top of that channel. That didn't happen. We had the rejection in the median line and over here as well, and that gave bears the opportunity to sell, bulls even to sell. We also have a signal here in the shorter term. Okay, that means that in case we do see this to continue lower, which means breaking, well, actually, first of all, going towards the 168, it might give us move down to the 50, perhaps even 61.8. Okay, now markets move in 5s. This looks like more of a 3 to me rather than a 5. So perhaps it might be also a reversal. The reversal chances will increase below the 165.60. Okay, and even more when we go below the 164.82, which is the 79% of this correction. Now, if we go higher, we could reach the 100% of this Fibo extension. That brings us around 170, and it is a very strong level to consider, at least, that we're not going to get a pullback, because 170, guys, is a huge psychological level. Enjoy the weekend, and we'll be here again on Monday.